And good afternoon, everyone. This is Dan with your weekly review and outlook, brought to you by the Derivative Technical Analysis program here at Van Onen Company. This is our second installment, second episode here of this weekly review and outlook coming to you. This is something, again, just kind of give a little introduction for you guys, just being that this is the second one. This will be kind of the regular occurrence here now with rather than getting the daily afternoon updates, we're going to give a little bit elongated weekly review and outlook, go over a few more charts, go a little bit more in depth with our analysis here. So you'll be seeing this again, as mentioned previously, every Thursday. It'll be available to you Thursday afternoons. And then obviously available to you throughout the weekend after and forward, moving forward. As long as you'd like to see the video, it is available to you. Big reason why we're moving it again to the Thursdays and just doing once a week rather than like a Friday or a Monday update. Really comes down to we want to be looking at these markets and giving us the ability to act on markets coming into Friday, like an end of the week type of situation, where we get closing prices not only from a daily perspective but also from that weekly perspective to really gain some edge there that we feel we have. So without continuing on with that a little bit or belaboring that too much, we'll go into our outline here for today's August 5th, 2021 here, weekly review outline. Again, kind of that introduction here. We'll then go into the economic calendar, highlight a few different bigger economic releases that pertain to the markets we're watching here. I'll give a quick update and rundown of the quick sheet for you, and then we added a few more different contracts this week. I want to talk over the dollar index, treasury bonds, and then grain side, I want to go back over corn for you guys, and then a bonus chart of the oats, December oats. Meats, I want to go over the October live cattle, and into energies, I want to run through natural gas, kind of discuss the run that's been on, and some previous kind of highlighted points, high volume nodes. And then obviously in the metal markets, I want to talk about the gold market that we're seeing. So first things first here, economic calendar that you can see on the screen. Really, the big thing coming in, we'll touch on tomorrow here. The big thing for tomorrow with these markets that we're watching is this employment situation. That number will be released at 7:30 in the morning Central Time, 8:30 Eastern. That'll be a big focus for us coming in again tomorrow morning. Could create some decent movement on the outside markets. You also have some U.S. Baker Hughes rig count here at that 12 o'clock Central Time, 12 p.m. Central Time. That could certainly give some shake and bake to the crude oil market. Coming into next week, however, we do have a few more different, economic releases that we want to be paying attention to. A lot of Fed speak next week, as you can see each day. But for Monday here on your left-hand side, for Monday, we do have that U.S. crop progress report out at 4 o'clock Eastern. As you can see here, that's 3 o'clock Central. And then coming in on Tuesday, we do have a couple different productivity and costs at 7:30 Central Time here. And then a couple different U.S. bill and note auctions that do these outside markets do pay attention to. When I'm talking the NASDAQ, the S&Ps, bond markets, they will pay attention to those announcements and those auctions. More Fed speak again on that Tuesday afternoon. Coming in on Wednesday, we do have around, I believe it is, let's see here. Actually, it's Thursday. Yeah, Thursday here. We do have PPI, final demand number, jobless claims number, export sales for the grains, and then later on that morning we do have USDA supply demand report and really just the USDA supply demand report for grains all around that we want to be paying attention to for for these grain markets could certainly cause a more of a catalyst type of event out of this consolidation that we've seen for a lot of these grain markets here, corn included, and kind of the bigger highlighted focus for us here coming into next week. That kind of wraps up the economic calendar portion here. Friday of next week will be a little bit on the lighter note in terms of economic releases. So really Monday through Thursday will kind of be the heavier set there in the month of August for economic releases. We'll bring in the quick sheet here for us now. And the quick sheet here this week, you'll see a couple additions and just overall management items here. Really, we're allowing this sold strangle and hogs to continue working here. Again, we're selling the premium of the $7,800 range here in those wings. We're letting that premium sit. We collected $260 here, and when we put it on, it was just over 70 days of DTE, so days till expiration. So we're going to need to let this sit for probably a good 20 to 30 days to really see our objective of if we can really get into that 50% profit taking arena that we'd like to get to. So we'll see how long that takes, how long they want to take premium away, how fast they want to take that premium away. In these markets, as long as they continue to chop back and forth, we should be able to take some premiums from either side, the put and the call, and manage that successfully. Obviously, corn bean trades here. Many of you are familiar with, short 13.31.5 on beans. Still keeping the stop at 13.49. We'll see how tomorrow comes in. May give us a chance to move that down here. We're seeing some decent range down here in the 1330s that if we do get another push lower, it will give us the ability to move that stop a little bit tighter. Under 20 cents of risk though on soybeans, really not that bad given the market conditions and just the overall movement that we're seeing in these markets, especially for beans. Then obviously corn here, we're going to talk about that chart here in the following moments, so we'll kind of hit that a little bit harder, just so stay tuned for that. Other markets in this quick sheet that we're really paying attention to, the Russell 2000, very much on our radar in the financial side of things, as well as treasury bonds here. Looking for a spot to possibly move up this treasury bond long short pivot posture idea. We're feeling a little heavy up here. Might be something that we move tomorrow on as far as moving that pivot of 163.09 higher. And in that case, we'd be looking for more of a short opportunity up here to play for the weeks ahead in this treasury bond market. Dollar index hanging around here. I'll discuss that in a few minutes here. Really, we're still looking at the silver market as well. Looking for longs above 24.50. We're sitting right at 25.18 right now. Really has not been able to really go anywhere this week on the silver market. So very consolidated in nature from a broad context, but also from a short-term context as well. And we're just waiting for a trigger there. We have no reason to be forceful on any of these trades or any of these recommendations. So we are going to be very patient. We're going to wait for our setup. We got to have not only the context correct, or at least aligned, and then also we want to have that setup and that trigger coming in as well. So again, there's no reason for us to be forcing any of these trades going forward. So again, we'll come in with the charts now on this section here. I want to first go over the dollar index from a longer term standpoint. So I'll switch to a 10-year weekly chart here. And as you can see, very long term in nature. Again, going back, kind of zoomed in, but going back about 7 years here now. And we have a bigger consolidation going on here from down around our downside reference 2 point of 89.70-ish. And now all the way up to about 93.25 where I have that highlighted. So this is going to be our consolidation zone in our opinion for the time being. We have a good chance to go test this 94 area as well. But again, this is simply consolidation within a range. So again, the bottom side will likely be bought here, and the top side played back to the middle to the downside. So it's more or less a back and forth washboard approach here. in that dollar index. That thesis won't change for us unless, from a big long-term contextual standpoint, until we can really get above 94 on that on this chart and on this index. So keep that in mind here as we're talking about these commodities as a whole. The dollar index is certainly going to have a big play on that. With last week's shutoff here, it definitely in our eyes confirmed some upside kind of shut off coming in for the second time now this year, and really again puts us back into this middle end of the range around 91.5 to 92 on this long-term weekly perspective. I'll bring it into a daily perspective now for us, and you can see from the daily perspective here those shutoffs that we were talking on the weekly. 93.25 is that upside, our upside reference 1 level. 94 is our upside reference 2. The nice thing that we do like to see on the daily time frame that can really set up for a trade here is, number one, the ability to hold in here at a support level in the short term. Number two is this momentum, this trend in momentum for RSI, seeing 70 plus reading, seeing this fade back here in price, and then the fade back in RSI coming into this 50 and 40 area, presents a pretty good opportunity for short-term trades to rotate higher and possibly test the high side of this range again. Again, we would like to and expect to see some selling up there again, but the trend here is certainly trying to hold in. So we're either due for, continued consolidation, again, from a broad sense of the term of fading 93 and 94 back to the middle. But from the middle, we can, and from the downside early, we can start to look at it and fade it, higher towards that middle end of the range. And again, it'll start to make more sense as we go along here. We start to see, if this range holds in, or if we start to extend lower into these downside ranges, that will also come into play in terms of just key inflection points that could very well change the risk reward or the thesis coming in for this dollar index. Next chart I want to run through here is that bond market, 30-year treasury bonds. Again, I'm going to pull up a long-term 10-year weekly chart here for us. Try to zoom it in a little bit more. Very similar to the dollar index in terms of analysis. We have this counter trend trade going on here, in our opinion, coming into our upside reference levels around 167 and 168.30. And we're starting to see kind of 2 weeks, not 2 weeks in a row, but 2 weeks within a 3-week period where we've seen some tailing action towards the top side. It'll be interesting to see if they close this coming in tomorrow with more of a toppy tail action on that chart here. But nonetheless, there's some decent resistance coming in here around that 167 into 168 level on 30-year treasury bonds that we want to be attentive to. Now, whether this brings us, a bigger sell-off or not, that is up in the air. But you can also see, just based on our, erase some of that, just based on our 3-month volume points of control, our profiles, that you can see the VPOCs on a 3-month level are sitting lower here, as you can see that I'm marking. So all this volume, all this trade that's trickled up here, we're still seeing value all the way down here. That could certainly keep this treasury bond kind of more as a magnet down below this 157 or into this 157 to 158 area, and create more of a rollover type of effect here, and a more of a back and forth type of market that really we haven't seen for a few months here, because they've been trading this thing pretty nicely to the top side. Each sell-off has seen pretty aggressive buy. So all that in saying, we have some decent magnets down here, again around that 157, 158 zone that could create some pull here over the next few weeks to months that drag this thing down. We'll see. Again, it's a scenario that's in our mind. Obviously, contextually, seeing resistance, seeing some magnets of VPOCs down below, and seeing the atmosphere we're in, that's kind of our first scenario that we're leaning on. And of course, coming into the RSI, seeing that measure around 60. Counter trend trades usually see RSI from a momentum perspective peak out around 60, and we're sitting there right now. So we'll see if that does indeed correlate this time or not, and we'll go from there. Daily chart of this, again, kind of showing the shut off here. Yesterday, more of a doji type of candle coming in. You saw a shut off a couple weeks ago with that reversal trade here. A little bit of a divergence, nothing too crazy though. I would say that's really popping out at us here. I will say the volume coming in yesterday on that doji candle, certainly something to be aware of. You can see on a shorter time frame, this 167.04 has a higher volume node with again that resistance overall coming in. This is a key level where we broke down from early in February and into March of this year. So again, price from a polarity standpoint, this was resistance. Now it becomes, this was support. Now it becomes resistance because we were below it, and now we're coming back into it from the bottom side in this treasury bond market. And again, here's a longer term, our longer term VPOCs, the 3-month, and then obviously the dailies. All these value levels are hanging out down here. So from a value perspective, a magnet perspective, those are going to certainly have some pull here. How much pull, we don't know. We won't know until time comes through here, but they are certainly going to have some pull here in the auction process, and we'll see if it carries through again to the downside at all. Next chart here, we'll keep running through. We'll get into some grains here for you guys. Keep running through the ladder. Dees corn. Not going to show the long-term weekly chart here because I think the daily chart does just as fine of justice for this market and for this chart here. And I'm actually going to go back 2 years. There we go. That's probably the more ideal situation, is looking back 2 years on a daily time frame. I talked about this last week. You guys should be very familiar with this. The analysis here is consolidation, coiling, which in our perspective, following this big move higher, sitting sideways, getting nice and coiled, nice and tight here in this market from a contextual standpoint, and even from a intermediate to short-term view, we're also seeing some tighter coiling action. This is setting up very well to be able to act upon a breakout to either the downside or the upside. Now, as we've mentioned in the past, because the previous trend was higher, this move was higher, and now we're accepting that previous trend. Our first thought is going to be, we want to be leaning and looking to the long side here from key pivot levels. Now on our quick sheet, we have 542.5 as our level to be long and short against. So we're going to continue to be looking for those long areas or those long triggers, as long as we're above that 542.5 level, to see if we can get corn traded back up into these higher ends of the range. And who knows, above those highs, we'll see what happens once we get there. But we do want to lean on more of a as long as we're sitting around this VPOC and showing good characteristics of trigger, we want to be looking to the long side here in that corn market. Now, should we come back below this downside reference level, that downside reference level is around 515.5. That certainly puts some risk off behavior in our hands here, and we have a chance to go test not only this $5 level, which is the 200-day EMA, but also I just want to make sure that's actually, yeah, we'll see. Yep, 200-day EMA there. And then the next level below that would be that March 31st day where we had that gap. That's also a very interesting level that we want to keep on the charts here for us. 477.5 here. That could potentially bring, again, we have to break, obviously, the way math works is we have to break 515, and we can start to open the floodgates for some of these other counts. But until we really break from that, we're in this consolidated action, and we have to kind of lean and look to this market to the top side. I think more good action that we're seeing is this RSI holding in. We have not seen measures below 30 on each of these dips. That's very indicative of a trending market situation for this corn market. So again, just another feather in the cap for this market to see this consolidation from a positive glass half full type of standpoint versus a glass half empty. I think is really the main point I want to drive across here. And then it really just becomes aligning our risk reward with the trade we want to be in the context that we're trading around. The bonus chart we'll run through here today is the Dees oats market here, which in our opinion has traded very clean in this I don't know, call it summer action here. And really you're seeing the previous consolidation with a breakout in late May, early July. So again, oats on a trending type of market behavior. Lately, we've seen more of a consolidated effort coming in here, but that's very healthy overall. Okay, very healthy coming in. You'll also notice. So I if we do consolidate in here, that's very healthy in our opinion. Some good volume coming in here. RSI trending very nicely with no divergences currently on this chart. Now, one thing we want to point out here on this that also gives us some belief of just positive action here is we consolidated here. You'll notice a very tight range. We broke out of that range, and then you notice the profile is gaining, and we're starting to accumulate bigger volume up here. The VPOC for this 3-month range is actually sitting up here. Now, normal distribution of volume profiles in this instance would suggest that we continue to build out towards the top side here and continue to move higher in this once we're done consolidating this VPOC. So that'll be something we're looking at going forward in this oats market. Maybe oats can kind of carry and lead the charge here for the rest of these markets. So far it's tried to, but none of these other markets are really following suit. So keep an eye on that. Keep an eye on that from just a risk perspective overall, and we'll kind of see if oats can kind of lead the charge here, or if these other markets can kind of play a little catch up. More specifically, if corn can play a little catch up to these oats on the charts here. Next chart we'll run through is the October live cattle chart here. Again, gonna keep it to I'm gonna try to keep it to a 2-year 1-day chart here for us at this point on live cattle. Very centered around this VPOC at 120, just above 124 at 124.30 area. We've seen some good consolidation where they've sold these highs here a couple different times in and around that 130 level on that October chart. You also have some decent level of support, again, around that 124.5 to 124 area, where this consolidation has just really been sitting in here for the time being. As soon as we get outside of that, we can see a bigger move likely take place for this market here. But so far, again, seeing resistance sellers show up here, until we get above that, that's gonna keep us from seeing higher prices. And then obviously this bigger volume point of control showing up as support. If you're really trading this or wanting to trade this from a shorter term perspective, you try to trade that range and short the top side here and buy the bottom side, play towards the middle or to the other side of the range. Again, until we see a break from either direction. That is really the case here for this October live cattle market, where we've seen some decent trending action in these other deferred markets, but again, in these upfront markets, very consolidated, especially when it comes to the live cattle here. RSI volume looking fairly good. I'd say RSI needs a little bit more work. I think that's kind of why we're seeing, not why, but just kind of points to more confirmation of just the trend. We need to digest these moves yet. It's not done trading, chopping, and digesting these moves that we've seen specifically in here and really here that we're not done digesting and gaining momentum. Quite frankly, what I want to see, as I erase some of this, I want to see this VPOC get moved up to this level up here. If we can get this VPOC moved into 128, 127 and a half, that would give me some confidence that, okay, there's more volume coming in now. This auction is ready to test break these previous highs here and go test some more prices higher. As of right now, I think this VPOC is causing some issues from a momentum perspective. That's going to act again, like you've heard us talk about in the past, more of a magnet for us right now. So we want to see the VPOC migrate up to this 127.5 to 128, and we believe that can give us the ammunition and the momentum to really see and go test some higher prices in this live cattle market. Next chart we'll run through is the natural gas market here. I'm going to start with a front month continuous, which is that SEP, and I'm going to go to a weekly chart here once that populates here. There we go. And main point I want to make with this weekly chart, and then we'll get into the daily, because I think the daily is actually a little bit more easier to see, but you can see that we have broken from balance here, and we're starting to we're carrying higher. We're starting to get into these loftier prices that we've seen failures at before. But notice how thin it's getting up here in the profile. Notice in this 3-month profile how thin we're getting as well in here. VPOC is still down here for the 3-month, and as well as the long-term VPOC is sitting down at 270. So as good as this trend has been, we do not see any RSI divergences coming in here. It's just a matter of, can we continue to find participants up here pushing it higher? I think that's the biggest question we have for us for this natural gas market right now. Coming into a shorter term chart, when I looked back to 2 years on a daily perspective, this is where we can start to kind of pinpoint higher volume nodes that makes sense for this auction to maybe pause at. And we're actually coming into one right now. You notice the last couple of days we've banged up against this 420 area, 420 to about 425. You really start to see some resistance coming in here on this natural gas market. Again, seeing a short-term divergence here on the RSI momentum perspective. But again, it's nothing that needs to be acted upon right now. I think it's more of a consolidated action type of narrative here, that we're needing more consolidation before we can really go higher. Just because we can't go higher, it doesn't mean that, or just because it doesn't look like we can go higher, doesn't mean that is an automatic short trade for us. We still have to be trading within the context of the situation, and understanding that we're coming in and banging up against these higher levels, these higher volume nodes that has potential to kind of keep this auction at bay. We could be trading in and around this range now and just build this out. And yeah, you could create some opportunity for the short side, but it could be a very quick opportunity to both the long and the short side. And it's just understanding that context there in this natural gas market. A couple other points I'll mention here. $3.60 is the VPOC we're sitting on here. So again, if you wanted to really play this just from a broader sense of the term, you have a high volume node here around 425, 427, another one up to 450 if we really want to get extended here in the short term. But really, you can use these volume nodes up ahead here to fade it back into potentially this VPOC that could very much act as a magnet. We should see support here in the shorter term around this $3.90 to $4 level. But that VPOC around 360 certainly can act as a magnet here to keep things at least somewhat at bay, again, from just rocketing to the top side here. That's a couple of different notes that I'll just kind of mark on in terms of VPOCs, volume profiles, that we don't get caught chasing these markets when markets are getting thin like this. But overall, very nice trend going on here. We're seeing higher highs, higher lows, consolidations, good trend and momentum showing up. So again, just because something looks like it's a little bit on the toppy side, and I don't even like to say toppy side, but just momentum could be slowing down, that doesn't mean it's an automatic short for us. We want to be looking for those opportunities if they arise. But again, if the trend, we want to be trading with the overall trend. And right now, the overall trend with higher highs and higher lows still points to the top side. We're just being very aware of these upcoming high volume nodes here for potential reversals or potential just quieting of the upside in this chart. And coming in with the last chart here for you on the day, coming into the metals market, we're going to talk about this gold market here. Go back on a 10-year weekly chart here, still very much consolidating in and around that 1800 level. I really like to consider gold just very much of a choppy mess right now. There's a lot of work that needs to be done on this chart from a long-term contextual standpoint, and really I think the biggest takeaway that I want you guys to have on this chart is that from a long-term perspective, I want to be buying this lower end of the 1700 zone, and then for the time being, excuse me, if we get down to that level. And then anywhere from 18, let's call it 1900 to 1915, really be looking for resistance to show up on these top side levels. And then really it's going to be more of a play the edges type of consideration for this gold market. Again, from a weekly long-term perspective, you notice RSI just hanging around in no man's land, price hanging around in this range from high to low. Again, contextually speaking, that's really the name of the game right now in that market. Now, if we come down to a shorter time frame here in the daily, you'll start to see some resistance show up around that 1830 to 1844 level where our upside reference one zone is. Again, high volume nodes sitting in there, so no real surprise that we're starting to see that seller, those sellers show up there. If we're above that 1844, then we have the opportunity to really go attack that 1900 level, 1915. But until that happens, it's just a very much a sloppy mess in here, and it really starts to point towards more testing of the 1768 level down below and test that support zone before we can go any higher. But you will notice, for again, the longer term view is if we can buy these lower prices in here, if they give us a chance at it, we will try to rotate them back higher, and then vice versa, higher prices in this range, like to rotate them back lower. And if you remember all the way back to the dollar index that we talked about at the beginning of the presentation, the dollar index very much going to have a heavy footing in the direction of this gold market and metals in general, precious metals in general. If gold is heading south, we're likely seeing a higher dollar, and vice versa. If gold is heading higher, we're likely to see a lower dollar. So it's always nice to keep that dollar, kind of keep that barometer of what the dollar is likely going to do, or just from a scenario standpoint. If we can understand the dollar, we can start to understand the environments of a lot of these other commodities and start to really view them technically a lot better and a lot more cleaner from their contextual standpoint. So right now in gold, extremely centered around 1800. We'll be watching this for breaks higher above 1844 and lower to 1768, 1736. But until then, very much centered around flat moving averages around that 1800 level. We hope you enjoyed this week's version and episode 2 here of the weekly review and outlook here of the derivative technical analysis program here at Van Ahn & Company. If you have any questions on this program, any questions on just our process, the Quicksheet, the analysis, trades, anything that might pertain for the markets for us, do feel free to reach out. We are available to answer those questions for you. We want to make ourselves available to you at all times for that. So again, don't be afraid to reach out for us to that. I do want to close with a disclaimer. Past performance is not indicative of future results. Futures and options trading involves risk of loss and is not suitable for all producers and or investors. This is a solicitation. Have a great afternoon and have a great weekend, everybody. Finishing off the week here, Thursday afternoon and into Friday. Again, questions, feel free to reach out and we'll sign off with that.